Welcome everyone to Vested Interest. This is Shane back again for another Stock Pick of the Day video. Today we are going to take a look at Broadcom. It is February 13th. Let's jump right into the video. And if you have not done so already, or you would like to help out the channel, or you are new to the channel, hit that subscribe button down below. Join us on this journey to financial freedom. Hit that notification bell so you're notified whenever we put out any new content. And hit that thumbs up if you find any value in the content. And share with anyone you think that might like the videos. Drop a comment down below. Let me know what you think of the videos. And what companies like Broadcom, if you don't have Broadcom, I know it's a pretty expensive one, do you have in your portfolio? I'd love to hear from you. Now, this is the vested interest stock screener. This is how I set up the videos. It's also how I look at a company on a high level. That's why we set the videos up this way. We're going to walk through it just how I would to see if I'm interested in investing. Now, just because it meets the screener, 5 of 8 or 6 of 9 if it's a financial company, does not necessarily mean I'm buying that stock. It just means it meets my front end screener. It becomes one that I'm interested in, and then I do more of a deep dive. So it goes onto my watch list, and I'll do more of a deep dive, figure out what I'm willing to pay for it, and then wait for it to hit that price if it's not there yet. So don't just blindly copy this and think that if it meets this screener, I'm investing. That's not necessarily what this means. Now, back to the video. If you want to know more about this company, check them out at www.broadcom.com. That's www.broadcom.com. That is their homepage where I pulled this information from. Broadcom Inc. is a global technology leader that designs, develops, and supplies a broad range of semiconductor, enterprise software, and security solutions. Broadcom's category-leading product portfolio serves critical markets including cloud, data center, networking, broadband, wireless, storage, industrial, and enterprise software. Our solutions include service provider and enterprise networking and storage, mobile device and broadband connectivity, mainframe, cybersecurity, and private and hybrid cloud infrastructure. Broadcom is a Delaware corporation headquartered in Palo Alto, California. So, just like it says, broadband, Wi-Fi, AP solutions, data centers, financial services, enterprise security solutions, broadband access, automotive solutions. They're the, connect everything, which is what they call themselves, technology company. That's what their hands are in pretty much everything. The reason why you're taking a look at them, down 2.63% on the day. We are talking about Broadcom Inc., ticker AVGO. Closed the day at $1,257.87. So you got to have a significant money in your account to be investing in this one. This is not one I would typically cover. It's maybe out of the range of some people's investing, but there may be some of you who watch the channel who are investing. If they were ever to do a stock split, it may be one that I would be interested in. But personally, this is an awful lot to pay for just one share of a company. I typically like companies that are a little less per share. That way I can build out the position relatively easy. But you can see pretty much down on the day. 52-week range as low as $601.29, as high as $1,438.17. So quite a range there, right? They are definitely closer to their 52-week high than their 52-week low. And kudos to those of you who maybe were buying back here in this 52-week low range. That's much better price, in my opinion, much more palatable. Even that's a little expensive. As far as cost per share, doesn't necessarily mean it's expensive for this company. Just a lot of money, again, for one share. But big range here, right? They're about twice what they were a year ago as far as stock price. Average volume, 3.1 million. Today's was 3.5. Beta of 1.27, so they are just slightly more volatile than the overall market. PE ratio, $46.85, a little high, but not necessarily for a IT company, a technology company. They typically have higher PEs because they're faster growing companies. That doesn't necessarily mean that this is justified. It just means that some of them do carry higher PE. So that's not something you should run away from. Just because a company's PE is high, that's taking on its own is not a good metric to utilize. It is a metric. It's not the only metric. Earnings per share, EPS, $26.85. Next earnings date coming between May 30th and June 3rd. I don't pay attention to a lot of earnings dates or earnings calls, but some of you might be interested in that. Forward dividend yield, $21 per share per year. This is a quarterly payer, so divide by 4, though we'll see that here in a little bit. Yield is 1.63%. This is a lower than I'd like as a starting yield, and if you were buying back in the $600 range, it would have been much higher. Ex-dividend date, March 20th. So coming up, and it looks like they pay out by the end of the month on the 29th. 1 year target estimate of $1,495.66. So they see it setting a new 52-week high here, right? Their 52-week high was $1,438. They're estimating $1,495.66. That would be a new all-time high. So, a couple $100 or a little over a couple $100 more in price appreciation is what they're estimating here. I don't know if I agree with that. I think a lot of the IT companies are overvalued right now, but that's just my opinion. Now we're going to get into the statistics a little bit. We're going to look at dividend yield theory. To do that, we look at their 5-year dividend yield average of 3%. We compare it to its current 1.63%. Over here, 1.63% forward annual dividend yield, same number. Since it is lower, that speaks to some overvaluation on this one, and I would agree. I would want much more of a pullback here, definitely under $1,000 before I'd even be interested. And I would like this back here in the 3. That would be a nice starting dividend yield for this one, right? 3%. 1.63 again is just a little lower than I like, and I feel like this company is overvalued. Though I have not done a discounted cash flow analysis, so that's just my opinion again. Payout ratio is a little high, 70.79, but under the 75% that I'm looking for. Now we're going to get into the financials a little bit. A lot of good information under the financials tab. You can find their balance sheet, their income statement, debt to equity ratios. Are their margins expanding or contracting? Is their revenue growing over time? Are they paying down debt? What do their assets over liabilities look like? Or do they have more liabilities than assets, which is a bad sign? Are they paying down debt? A lot of good information there you should be looking at if you're investing in individual stocks. And if you do not want to do the research, you should be buying index funds or ETFs. VOO, S&P 500, or another one like it would be my recommendation, and would be Warren Buffett's recommendations for most investors also. Now we're going to take a look at free cash flow. We want growing free cash flow over time, because typically if a company has growing free cash flow, they have growing dividends. Going back to 2021, you can see $13.3 billion here. 2022, $16.3 billion. 2023, $17.6, and this is to date. They are also repurchasing their own shares. 1.2 million there, 8.4, 7.6. So aggressively repurchasing their shares. Very nice free cash flow growth. So that is nice to see. 13 to 16 to 17. That's pretty steady. Nice free cash flow growth. That's what you want to see. So far, the only issues I have right now are the price of the shares, price per share on this one. Excuse me. We're going to jump over to stockanalysis.com, another site that I like. You pick any stocks you like, sites you like, just make sure you're picking more than one so you can make sure the information you're getting is accurate and up to date. Excuse me, man, my sinuses are really killing me right now. 22 stock analysts have taken a look at this. They call it a strong buy. This is one I completely disagree with. I would not call it a strong buy where it's at. They have a low estimate of $905. That would be more in line with what I'd be looking for. That would be a 28.05% decrease from where it currently sits. Average estimate of $1,424. That would be a 13.22% increase from where it currently sits. High estimate of $1,700, which would be a 35.15%. Again, I don't agree with this. I think you're maybe in a buy, if not a hold. I would really call it a hold. I think the IT sector overall is just overvalued in my opinion right now. Now we're going to get into statistics a little bit here. Excuse me, I apologize. We look at return on equity and return on invested capital to see how financially efficient the company is investing back into itself. I like 10% or better for these metrics. Return on equity sitting at 16.55%. Beats the 10% I'm looking for. Return on invested capital a little lower at 9.55%, just under, but not egregiously so, close enough where I'd call it fine. I like 5% or better forecasted EPS growth. This is sitting at 14.06. That's very fast EPS growth, as well as very fast revenue growth, 15.26%. And that may be partly why they have such a high PE. That would justify some of that price to earnings ratio being that high if their revenue is really going to be growing this fast. Let's take a look at the dividend. Again, stockanalysis.com calls it 77.84%, which would be above the 75% that I'm looking for. Now, Yahoo Finance called it 70%, so either way, above 70%. So it's right at that 75% or lower that I'm looking for. But it does have fast dividend growth, 13.22%. And if it has fast revenue growth, that should, and good free cash flow growth, that should be a fast growing dividend. Going back to 2021, they were paying $3.60 per share. December 2021, they raised it up to $4.10. December 2022, they raised it up to $4.60. And then December 23, they raised it up to $5.25. I would expect in 2024 in December for another raise along with the same line, so long as all their metrics remain the same. Well, that is really it for this one. Let me know what you think of AVGO. Broadcom, is it one in your portfolio? Is it one that you are avoiding? In my opinion, it needs to come back significantly. We need more of a pullback under 1,000 before I'd even be interested in looking at it. Really, even then, it would be suspect. I just don't like paying that much for one share of any company. And it might be a great one. Maybe it's in your portfolio. Let me know in the comment section down below. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Hit that subscribe button. Join us on this journey to financial freedom. Join the vested interest community. And drop a comment down below. Let me know what you think. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company like Broadcom you'd like me to cover in the Stock Pick of the Day series, go ahead and drop it down below, and I'll try to work it into the rotation. This is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Hope you have a great week, and we'll see you in the next one. I'm not a financial advisor. I don't think this presentation should be considered financial advice. I'm going to share my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can't lose money. Should never invest any amount. Not concluding. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice counsel of a certified financial advisor.